Hey traders, welcome back to the channel. In this video, we're going to talk about the Ashford Hospitality Trust, ticker symbol AHT. Now, it's been a very disappointing day for the stock with a huge sell-off coming from the news of the reverse stock split. However, I also believe that, this stock has been a little bit oversold and right now presents a very interesting buying opportunity. So in order to break that down, we're going to take a look at what a reverse stock split is, what it does, and how it specifically will affect AHT moving forward. After that, we're going to take a look at some other news that came out this morning before finally, as always, taking a look at the charts, breaking down key levels, key indicators, and more, so we know how to best play this stock moving forward. So without any further ado, leave a thumbs up on the video, subscribe to the channel if you haven't already, and let's get started. Okay, so before we get into anything specifically related to AHT, we need to understand what a reverse stock split is. So we came here on Investopedia, and as you guys can see, a reverse stock split is a type of corporate action that consolidates the number of existing shares of stock into fewer, proportionally more valuable shares. Reducing the total number of outstanding shares in the open market can be pursued for a number of reasons. However, it oftentimes signals that a company is in distress. So no, by no means is this a good move or a good sign for the company. However, it's also not the end of the world. It doesn't, necessarily make the shares any less valuable. And what we are seeing right now can be a bit of an overreaction to this news. Okay, so the main thing to take away here is that a reverse stock split is not going to decrease the value of the shares themselves. Okay, if you have 10 shares of a stock at $5 and all of a sudden it does a 1 to 10 stock split, yes, you're only going to have one share now, but that one share is going to be worth $50. So ultimately, your value and your position in the company is going to remain the same. Now, oftentimes it does signal something bad. It does signal that, maybe a company isn't doing so well financially and it needs to maintain a higher stock price. However, it doesn't naturally believe that the stock price is going to rise. And as a result, they have to kind of manufacture it through a reverse stock split. And that could very well be the case here for AHT. As we know, they have a lot of debt. They are more than likely going to continue to dilute shares. And as a result, this reverse stock split may be their only option in order to kind of raise the stock price to levels where they currently see fit. They are kind of trying to spin it in a positive sense. If you do take a look at the message that came out from Rob Hayes, the CEO, they do say that the company is committed to making owning Ashford's Trust common stock as a shareholder as friendly as possible. And they believe that implementing a reverse stock split is another important step for the company and its stockholders to optimize our position. Furthermore, just some other notes of positive reasons to do a reverse stock split and how this can help the company. The reverse split will meaningfully increase AHT's market price per share above the $5 per share threshold required by many institutions to hold shares, and also that some brokers limit the ability or increase the cost to margin a stock under $5 per share. So ultimately, what that tells you is that, by increasing the price of their shares, all of a sudden we could see new institutions and new players get involved with the stock, which will naturally increase the price. However, like I said, there are also downsides to reverse stock splits. It does kind of show that a company isn't necessarily in the best financial position. We've talked about this in the past. AHT clearly, still struggling with its debt. And even though, our bullish thesis remains intact and we are seeing that the company is starting to recover from the COVID pandemic, it is nowhere near close to being done and being back at pre-COVID levels, which kind of explains this move. So yes, ultimately, I do believe this is a negative. This does kind of indicate that, AHT has a long way to go before they can naturally recover from the pandemic. However, all that being said, I also believe that this is a good course of action for the company, that long term it is going to, help the stock price increase. And also right now, given the overreaction we've seen in the markets, we do see a good short-term buying opportunity as well. There was one other piece of news that came out this morning. We did see some earnings results specifically in relation to the RevPAR for quarter 2. So AHT announced these numbers. They see that versus the 2020 COVID year, we are seeing a 256% increase in the month of June for RevPAR and an overall increase in quarter two of 372%. However, compared to pre-pandemic 2019 levels, we do still see that RevPAR is minus 37% for the price of June, or for the month of June, and overall for quarter two is minus 46%. That being said, if you take a look at these 2019 numbers, you do see that this is ultimately trending in the right direction. Okay. We had minus 53% in April versus minus 37% in June. So ultimately, we are going back up in the right direction. However, we are still not at those pre-pandemic levels. For those of you who don't know, RevPAR is the revenue per available room, and it is a metric used in the hospitality industry to measure hotel performance. The measurement is calculated by multiplying a hotel's average daily room rate by its occupancy rate. So as you guys can see, this is going to be a big indicator of where AHT is as a business, how they are currently performing. And as you guys can see, it is trending in the right direction. Hotel rates are starting to increase and occupancy rates are definitely on the rise. However, we still have some work to do before we get back to those pre-pandemic levels. So that's something to keep in mind. It's not great, but it also is a good sign that the company is starting to recover. Finally, let's take a look at this chart. Let's take a look at just the massive sell-off we had and after hours on Friday, as well as pre-market today. We started with just this massive gap down all the way into the 270s, 260s. And after that, we kind of started to trickle out a little bit and, just kind of the downward momentum has continued throughout the day. We are starting to kind of curl a little bit with about an hour and a half left to go in the trading session. Right now, the stock price sits at 268. Taking a look at the indicators, as you guys can probably guess, most of them are going to be bearish here. Starting off, we do see this yellow line here that represents the VWAP, or the volume weighted average price. That is going to tell us whether we're in bullish or bearish territory heading into tomorrow's trading session. We are more than likely going to close below the VWAP, which means the bears are in control of tomorrow's trading session. And as long as there is panic and fear in the stock, well, there is potential downside ahead. So that's something to keep in mind. Taking a look at moving averages, we do see that this massive drop off has, created a lot of bearish signals on the moving averages. The 21-day EMA currently sits at 457. The 50-day moving average sits at 406, and the 200-day moving average currently sits at 303. As you guys can see, AHT is below all of these levels, meaning that ultimately it does give off bearish signals in the short term, in the intermediate term, and in the long term. I do want to point out that the 200-day moving average is one of the biggest resistance support levels that, a stock can experience on the charts. And as a result of this massive kind of breakdown, you are likely to see a bounce back and a retest of this 200 moving average before really starting to see major downside. It's not very likely that you see a stock fall, very well below the 200-day moving average without at least retesting it before moving lower. So I do think that we will get that retest. And ultimately, if it does break above and hold that level, we should also probably expect a retest of that 50-day moving average. So yes, it is bearish that we are sitting below it, but also keep in mind the fact that we broke through these levels so quickly probably means that a retest is in order before essentially the stock moves further in any direction. So that is something to keep in mind. Final indicator, this is actually going to be a little bit bullish. It's going to go back to what I was saying about this stock being disgustingly oversold. If we do look at the RSI, we can see we've made it all the way into very oversold territory, almost to the point where, short sellers are very overextended. So this is a good sign. It does mean that, there should be a little bit of a relief bounce here, that the sell-off happened way too quickly. And I fully believe that that bounce back is going to come. So with all that being said, now let's take a look at key support and resistance levels if you want to play the stock for a bounce back. So starting on the support side, this 266 level and also the 240 to 245 level are levels that you should be familiar with if you've been playing this stock like I have for a couple of months now. These were huge levels 2 months ago before AHT initially started to make its run up. And, this is a level where a lot of buyers will come in. So both of these levels are worth watching for. And like I always say with support levels, if you are looking to either add to your position or open a position, you should try to buy near these levels, because doing so will minimize your risk and maximize your upside. If that 240 level does break, we do also have another support level at 230. At some point, the buyers are going to step in, because if it does continue to sell off, it's going to look very, very overextended on the short side. Taking a look at resistance levels moving forward, we do have this one at 282, 290, and then $3 right here is going to be a big level, because it's right next to this 200-day moving average, and it's also a key psychological level. This is the main area I do expect to see a retest of before, really anything major happens with this stock. I do think that, ultimately, if, the market decides that this is a completely overblown sell off, we will be able to break above and then start pushing the resistance levels in the $3 range. However, regardless of whether it does break above or doesn't, I do think that the stock will get a retest of this level before making any further move. So that's something to keep in mind. Final thing to take a look at is going to be the volume. As you guys can see, overall big volume spike over the last 2 days. And as you can tell by the price action, this has been mainly selling volume, big sell-offs caused by big volume. If we do want to see a reverse in the stock, expect for this volume to start to bottom out, to start to decrease first. And then once we start to see some positive price action coil up, that's when you want to see volume return to these levels and push the stock price higher. Volume is going to be another indicator that's going to help tell you what comes next for this stock. But let me know what you think comes next for the stock. Are we going to get that retest of that 200-day moving average, or are we going to continue to move lower? I'm always interested to hear your guys' feedback. If you have any questions for me, let me know. I'm happy to answer them. If you like this video, leave a thumbs up. If you want to see more content like this, subscribe to the channel. And aside from that, have a great rest of your day.